The Funding Rate Heatmap is a useful tool for crypto investors. It's John from stopsaving.com, and in this guide, I'll explain what the Crypto Funding Rate Heatmap is, how it works, and how to use it correctly in your trading or investment strategy, especially when it comes to managing risk and avoiding big losses in the world's most volatile market. So before we jump into the Funding Rate Heatmap, we first need to understand how perpetual swaps work in crypto. Perpetual swaps, or perps, trade on crypto exchanges like Binance and Bybit and track the prices of digital assets like Bitcoin and Ethereum. Perps are a type of futures contract, which is a type of derivative. Normal futures contracts have an expiration date, but not perpetual swaps because they're perpetual. Perps allow investors to trade crypto with extreme leverage. For example, Bob wants to enter a long buy trade for $100,000 via a Bitcoin perp, but he only has $1,000 in his trading account. So Bob takes a 100x leveraged long position with his $1,000 to boost his trade size. This could work great for Bob if the Bitcoin price goes up, since he'd earn profits on a $100,000 position. But his $1,000 account would be completely wiped out, i.e. liquidated, if the price of Bitcoin dropped by just 1%. So thanks for playing, Bob. And even if Bob was printing money from his trade, he could still have another big expense on his hands: perpetual swap funding rates. These funding rates change every 8 hours or so, depending on the exchange Bob uses and the general state of the crypto market. Here's how it works. When the crypto market is bullish and prices keep rising, there are typically more traders taking long buy positions than short sell positions. And in that case, long traders pay a positive funding rate to short sellers, who essentially earn funding rates for betting against the market. And when the market is bearish and prices keep dropping, it can be the opposite. Long traders might earn a funding rate from short sellers, aka there's negative funding rates. Funding rates incentivize big traders and market makers to go long or short to pick up fees. This funding rate mechanism keeps perp prices in sync with the actual crypto price. As a side note, BitMEX Exchange co-founder Arthur Hayes and his team introduced perps back in 2016. I've had my fair share of fun trading on the old Bitcoin Mercantile Exchange back in the day, but with much less leverage than Bob. So now that we have a good idea about how perpetual swaps work, I'll explain how the crypto funding rate heatmap works. Perpetual swap traders should keep a close eye on funding rates, because when those fees work against them, they can pay a lot of money to stay in their trades. As you can see here on this funding rate heatmap from CoinGlass, it color codes the yearly funding rates for different crypto perpetual swaps over time. When a box turns fully orange, it means long traders are paying 100% or more of their entire position size per year in funding rates, i.e. poor old Bob would need to cough up $100,000 per year in funding fees just to stay in his 100x leveraged long position, assuming the same 8-hour funding rates. But when the box is greener, funding rates are closer to zero, and when it starts to turn purple, Bob would actually be collecting funding fees from short sellers, assuming he isn't liquidated beforehand, that is. And here's how to use the crypto funding rate heatmap in your strategy. You see, long traders don't mind paying expensive funding fees when crypto prices keep rocketing higher each day. That's because their profits are consistently compensating them for those fees. But they can lose money fast when prices drop or go sideways for too long. So when the juice is no longer worth the squeeze, they start selling out of their long positions. But it gets worse. Perp traders can also become forced sellers if their stop losses get breached, or if the exchange liquidates them like Bob. That's why you often see a quick 10 to 30% leverage flush to the downside. This can also happen in a raging bull market because that's when funding rates usually go up the most. Just look at what happened to Ethereum here when the ETH price dropped 16% in a few hours before carrying on with the rally. So as a general rule, it's best to keep your guard up when you see the funding rate heatmap burning orange for most coins. It usually means a leverage flush could be just around the corner, and it may not be the safest time to ape into your favorite altcoin. Just keep in mind that funding rates can sometimes stay elevated for longer than you and Bob can stay solvent. So for the love of God, don't try to short a crypto bull run just because you see an orange heatmap. So that's it for this video, and here are the key takeaways. Number 1, perpetual swaps or perps are futures contracts that track crypto prices. They're perpetual, so they never expire. 2, Just because perps offer massive leverage doesn't mean you should use it. Don't be like Bob. And finally, number 3, the funding rate heatmap color codes the yearly funding rates for different crypto perpetual swaps over time. The more orange you see, the more cautious you should be. As usual, none of this is investment advice, but if you found value in this content, remember to subscribe to the channel and click the notification bell to get these videos as soon as I publish them. And don't forget to like the video if you did. This helps our content reach more people on YouTube. You can also find a more detailed written version of this video on our website, stopsaving.com. I'll leave a link to that in the description, along with a link to our free weekly newsletter for how-to guides and investment insights across crypto, stocks, metals, and more. So thanks for watching and take care.